in simple terms, they offer perpetuals where you can trade with leverage.
Yep.
Okay.
That's what you do.
So, do you like to introduce about yourself a little and a little about like perpetuals?
Little about me. So I come from Kerala, South India. I started my journey in 2018 2017 when I went to this hackathon by the Devfolio folks. So that's why I'm here, because he called. So I went there and I tried to make something and I was not able to make something. So I was like, okay, let me try making something. And then I kind of like left crypto over time. And then somewhere around 21, like crypto was kind of booming, and there was this small like reimbursement for a flight of $100 I had got at that time, and that just shot up to like, I don't know, $1,000 or something, and we just put money into a lot of things, and it just grew from there. And then we were like, me and my friends, basically my co-founders, we were trying out a bunch of products, seeing like how to farm things, all those kind of things. And we just thought the thing that and every other builder thinks, which is, I can do better than this. So we tried to make something better, and that is how we started with Polynomial. So we went to this hackathon and then won it, and then we raised money, and then we ended up here. And how we made Perps is like there was this FTX which had a crash. So one of our employees, he kept like $5,000 in it and he lost the money. So we just thought from ourselves, like from first principles, it does make sense to make something like this. So I can explain what is Perps. So Perps is like something in crypto, like we made for primarily like to short assets, like to make money when price goes down, right? And or like to make money when the price goes up. So that was like kind of how Perps started. And so the idea came like long back. So you can think about it like this, like when like, let's say in the start, like when we had like we had like options and futures, which are from like 1970s, like very old instruments. A guy came up with like a better mechanism in like 93 for like trading like illiquid assets called Perps. And we needed like crypto to make us realize that that's like a really good way to trade, because a lot of people were mining Bitcoin and they wanted to make sure that they can like pay their electricity bill on time and like not have fluctuations in these prices. So you can just lock in the price by shorting, and that is like kind of how it is. So shorting means like selling at a price, and then see like let's say like the price is $1,000, you can just short now and then you can do it. So that's kind of like how Perp started.
Okay, that's a great answer. Maybe like let's dive into some hot takes here. Okay, if you are following crypto Twitter, then we have this thing about Hyperliquid has put up a proposal or else a call for proposals where they asked people to pitch in their ideas for being the USD hedge, the stable coin for Hyperliquid, where they might be switching from USDC to USD hedge from later on stages. So what is your take? Like, do you think that all the perpetual dexes would end up having their own stable coin for their ecosystem, or else is having a reputed stable coin issuer do handle that?
I think like primarily all chains would issue their own token for stables, because stablecoin, like it's more clear now because of Genius Act, which is like a US regulation which is like letting people like create stablecoins for themselves. And if you look at like a chain, like I think I saw this quote by Solana. They were saying like, why are we funding Base? Because a lot of TVL of USDC is on Solana, and they can just make it into some other stablecoin of themselves, and then they can just earn like 4 or 5%, which is probably worth like billions or millions, hundreds of millions of dollars in revenue per year. Yeah. And so in Hyperliquid's case, they had around $5 billion of USDC. So that amounted to like $200 to $400 million in revenue. So it didn't make any sense to just give it to Circle, who is owned by Coinbase, which is Base. So they kind of said like, screw these people, and they do it. The coolest thing about this is like, if you're not really following their Discord, you won't even see it. It's like a small bullet point in like a small Discord post in like 3 lines.
And few people like writing love letters to Hyperliquid community saying that why we are better.
Yeah, like everybody wrote like proposals, but they went with like a guy who was more aligned with them, even though he was offering like lesser things, which kind of makes sense because they don't want to work with like big companies, and Hyperliquid is also like a big screw you to like, VCs and stuff like that. So they want to like stay aligned with that, which I think is like a good thing. But I think generally this trend is going to just accelerate. I think more chains will issue their own stables because it's regulatorily more clear. I think like it's what stablecoins are, what, 300, 400 billion dollars. I think like it's gonna accelerate. I think by 27 the projection is like 4 or 5 trillion dollars of stable coins on the blockchain.
Like the Genius bill that US government proposed might gonna accelerate it further.
Yeah, so like it's normally.
Yeah. Well, coming to my next question. It's a huge concern that whenever someone trades on perpetual dexes, which also claim to be L1 or L2, users can be screwed, or else like their positions can be liquidated whenever the protocol wants to. So what are your thoughts on it? Like, is there a way to prevent liquidations that are not unauthorized, or else a better check mechanism?
I don't think it happens on on-chain thing. So like primarily like perps work in two mechanisms. One is like an order book model, and the other one is a AMM model. So we work in an AMM model. So some perps, what they do is they liquidate you on the price trading on the perp order book, which can be a little bit screwed because somebody can just trade on that exchange and then sell something in massive size and liquidate you, which can lead to like a lot of losses.
Whenever there is like less liquidity.
Yeah, like it has happened to me also like a couple of times. Like it's just one exchange, the price just dropped and I was trading perps over there. So that happens primarily if the liquidation mechanism is not using the average oracle price. I think like Hyperliquid or someone like that like does that. Yeah. But on average, like most people, what we do is we take aggregated price of all the the exchanges, and then we use that to liquidate people. So liquidation is like, just to explain, like liquidation is when like you're trading, and when you're trading with leverage, right? Like let's say you have $1,000 and you are opening like a $10,000 position. The max loss you can make is like $1,000. So you liquidate people when they are like near 1,000, and you remove their position from existence. That's basically what liquidation is.
Yeah. Coming back to my next question, this is a great answer, by the way. Usually, I would want to add on this. Usually, AMM-based dexes use time-weighted average for getting the liquidation price, but for the clock-based dexes can use the price that is based on the clock perpetual order book, which might deviate, and there is this thing called funding rate, which tries to bring the perpetual order book price close to the spot order book price over the exchanges.
I mean, like, how I think about it is like, it's like our name is polynomial. So I'll say in that way, like perp is basically a function which is f of x equal to y. So basically x equal to y is the function. Essentially, like you're trying to make a function which is equal to the price of the asset itself. So let's say ETH is there. So ETH perp will always be equal to ETH. But the thing is, when people buy ETH perp's price goes up, right? And when people sell ETH perp's price goes down. But this instrument, what it tries to do is it will make sure that the price remains at the same price as ETH across all exchanges. So what we all do is like try to use this concept called funding rate, where in a constant duration, if it's priced higher, some of the people are holding it at a higher price, sell it to the spot price. So it's I mean, like primarily it's like very good for a liquid market, right? And I think it's like a better instrument because a lot of people trade like options and futures in stock market, and I think like for most people perps are a better instrument than even for stocks, because perps work for very liquid things like 300-400 million market cap, like garbage tokens in crypto. You can trade with perps and you can have higher leverage, and it's just a more beautiful thing. And like options are like in TradFi, like we started with options and we kind of gave up because it's just a like old and outdated thing. I think like everybody is going to slowly move to perps, even for stocks, even for RWA, gold, whatever. Like every asset, I think like people will eventually start trading perps. It's a newer instrument, and I think like how I think about it is like when take the story of numbers, right? Like we had this Indo-Arabic numbers, right? Like 0 to 10, 9, whatever. But then the Romans had these Roman numerals, which were pretty shit because if you have to write 9, it is like X and 1 in the front. But then like for hundreds of years, they were not willing to accept like the other number system is better. And they were just like, it became very political and they kind of banned it. And it all happened. And then like, it took like around 500 years since we invented printing, and we realized, and everybody was like, this number system is stupid because I can't go back, because I can't like type like this.
Yeah.
So everybody started like using Arabic numerals, which are like, Indo-Arabic numerals, which are like far and greatly superior. So you need like a new technology sometimes to take an idea which was kind of forgotten, but like a superior idea. And I think like that is what happened with perps over here, because this idea came from 93 and it became popular in 2017 when BitMEX introduced perps. So like, I think it's like a cool instrument.
Yeah, like I would say evolution which is on the way, and perps will in near future replace options or else be a better mechanism for hedging, because it just offers a leverage for you to take and put your position on. Like if let's say if there is a 100x leverage, it's $1 that I have would be worth $100 on the order book of perpetuals. So what would you say, like what are the timelines for finance industry to seriously look at perpetuals and start integrating in them, like the traditional finance guys?
I think like that's how, like look at like stable coins, right? Like initially they all said like it's crap, and when they realized the potential, they all like did regulation. Now like it's very hard for anyone to like do without the genius framework to even do. So it will happen like via regulator capture. No. So I think like similarly like it's going to happen. I don't know, like regulation is not something I'm not very good at, but I think like everyone will like slowly do it. Like stocks on crypto stock, like perps on stocks is already there.
Yeah,
I think like we are also like planning to add it soon. So like it's like something like which will happen.
perfect. So it's a great chat with you, Gautam. You have really made good answers, and I guess if anyone have any questions about perpetuals, Gautam will be here and you guys can chat with him. Over to you, Ashwin.
Round of applause for Gautam and Manoj. All right. Up next, we have Srijan from Noise and Denver from Devfolio back up here talking about internet capital markets. So let's give them a cheer.